Hello, everyone. Welcome to this week's edition of Mortgages and Markets. We've got the usual guy back because we tried everyone else. No one else was available on a Friday afternoon. So Sam's here. Sam, welcome.
Thank you for the invite again, Stephen.
You're welcome. You're welcome. Hey, listen, I can't help but notice we got a bit of a role reversal happening here. So I'm in my basement. Oh, I'm usually in my basement, but standard COVID disclaimer, I got people working on the house. So we might see a dog come through again or a worker that we just don't, doesn't belong. But you've got
Sure.
like almost like a real office now. Look at you.
I know. Thank you. Thank you. You even see cars in the background. I told you every week, going to keep it spicy. I got the next 2-3 weeks figured out too. Don't worry.
Of course, we're 2 minutes before this thing talking about what are we going to talk about, but you've got the office space figured out. So we're good.
Yeah, there you go.
Very good. All right. So let's get into the first topic. And I heard this on a podcast and we're starting to see it on social media. It's of interest to me because I have two kids that I absolutely love, and I would also love to see them leave at some point. But apparently with this COVID thing, we're going to have an issue. This generation that is just graduating high school, university, what they're now saying is that, especially the ones graduating university, not only is their lifetime of earnings going to be reduced by upwards of 10 to 20%, but the time in which they start to actually earn most of their money is also now going to be delayed by up to 10 years. So this generation, they didn't get their senior proms or their convocations or whatever. And now they're going to be even more delayed getting out there into the world. Everything from tougher to get jobs and high unemployment, tougher to get your first mortgage. This is an ongoing thing that this is going to be a problem for some of these kids.
Yeah. I mean, this has been an issue really for the millennial generation and now into the Gen Zs, right? You have a lot of economic turmoil that seems to be almost a decade event, which originally we were kind of taught, well, this is a 50-year event. We're seeing a huge shift in society and just the evolution of humanity. And now we have these same issues of, like you said, are we going to be making as much money? Or the conversations that I'm now hearing is, will the people working from home have to make less money because of the fact that they're not going to be commuting and eating
I
out as much
heard
at
that.
work and all that stuff, right? Which makes sense. And you have an inflated debt system, which seems to be continuing to chug along, which is bringing down our GIC rates and our savings rates. The world of 3, 4, 5, 12% doesn't exist any longer.
That's right. That's
Right.
right.
So
I remember when I first started, they had, I worked at Bank of Montreal. I remember we had a rate riser GIC, and people were complaining that, what do you mean, my first year, I'm not going to make 5.75%?
yeah,
Right now, my God, we're lucky if you're lucky if you get that over the whole lifetime of anything right now, right? So, but
exactly.
I also didn't think about the whole thing just around not making as much, and well, you're working from home, so employers, if they don't have bricks and mortar, guess what?
Yeah.
I don't have to pay you as much, right? So we can just reduce everywhere. So yeah, it's going to be this domino effect of this moment in time of a pandemic is just insane, right? So,
Yeah.
it touches so many things. So
Yeah. Even before we kind of got into this, the CPP is going to be pushed out for people below a certain age, starting at 67 instead of 65. It's really just a lot of small things that are going to cascade to become a big difference for this generation. I think the Freedom 55 goal might be a little too ambitious for the average individual.
Sam, I think we're going to be about 75, 80 doing this video, man.
Can't wait. Can't wait to
I got
see.
visions of the Jetsons and like a spacesuit and that sort of thing. Can you just
Amen.
imagine? All right, next thing I want to talk about. Let's talk about housing. I'm going to bring up a screen. And again, listen, if you're not on YouTube trying this out, you are missing out on one heck of a thing because Sam looks great today. So one thing RBC came out with through RBC Economics here, they're talking about housing trends and affordability, because you know what, as this whole thing plays out, and I've said this to customers, we are making this up as we go along. More and more stuff is being discovered, like we just talked about, the millennials and Gen Z and all those people. Now what about housing trends? How are things shaping up? So in this particular on this particular site here, they're talking about Well, before COVID, there was less affordability anyway, right? There were rising house costs. People couldn't afford half the stuff that was out there. We had 50 offers on everything. So overall, it was tough to begin with. Now with COVID, though, what we've got is we have, and it says here, we have housing activity plummeting from coast to coast. Well, not really. I think definitely a big part of it is we do have certain areas that have just been heavily impacted by this. But there's actually some areas like Southwestern Ontario that I think because of the glutton of buyers, they're now out. Some of them aren't working. We're still okay from a supply and demand perspective, still multiple offers, but we're okay now, right? We're getting better because there is less inventory and less buyers. Um, they're talking about the road to recovery being long and bumpy. You know what? Let me ask this question to you. In general, we talk about three types of recovery: a V shape, where it goes down, comes right back up. We talk
Mhm.
about a U shape, that's a very slow recovery. And then we talk about an L shape where nothing really comes back. Generally speaking, housing market, what do you think we're going to see?
I would, so what we are seeing, I should say more importantly, and this isn't just North America, because if you look at the data from other parts of the world that have already been impacted, like China, it seems as though housing is probably one of the more resilient areas, um, simply because you have to live somewhere.
Yep.
So we are seeing what I would arguably call closer to perhaps a V recovery in that aspect. And the other thing that I think people are a little bit perplexed or confused by is that a V-shaped recovery does not mean that every single part of the markets and of asset bases and employment and all these things are all going to recover in the exact same way,
Yeah.
right? So to your point, or to your question rather, I think that the housing market will probably rebound, or we're already seeing that rebound. I can tell you anecdotally from the people I know in the trades, they are very busy,
Yep.
and
Absolutely.
I don't know if that's a labor force issue or the fact that things got a little bit slow to the punch, getting back open, but it does not seem to be that they are struggling to find business. So anyways, long story short, I do think that that is going to be the case. Housing will probably bounce back, or has already started to show signs of being resilient.
Yeah, and I totally agree with you. I mean, there's some fields that are incredibly busy right now. I mean, like
Yeah.
as I said at the beginning of this, I've got tradespeople in my house doing work because I think people, they can't afford to move. They're going to make where they live a little bit nicer, right? That's much more affordable than obviously selling and buying and that sort of thing. But yeah, there's some industries they're just going crazy now. If you're working in the airline industry or the cruise industry, then yeah, it's a U, but it's going to be a long U at the very bottom of that letter, right? So we'll
Yeah.
see what happens, but
Yeah, things are going to be a little bit challenging for certain industries, definitely trying to come back and recover, and the fear of potentially things being pushed out, and the conversation about unemployment. How long will it take for true unemployment as a whole to recover, to get back to the point that we were at, called 3, 4, 5, 6 months ago? That type of that area is something we're all trying to watch for, because it has a big domino effect on all the other parts.
yep, absolutely. So we digressed a little bit there, but the final point in this article, so it's a two-headed statement here, but they're talking about moderately lower home prices. I think that's very important to understand here. Moderately lower home prices and exceptionally low interest rates. Sam, I know your clients aren't happy. Mine are doing like cartwheels, okay, because the rates are just crazy low right now. So, moderately low home prices, low interest rates to reduce home ownership costs. That's good news. That means better affordability. But on the other side, the risk of falling household income once government support programs expire could partially offset gains in affordability. So, in other words, low rates, maybe some moderately lower pricing in certain areas, definitely not Southwestern Ontario. But once this all kind of sorts itself out, and the government support programs are gone, and maybe people are left without jobs, that's going to be the big impact going forward. So we're more to come on that one for sure. Do you kind of agree with that statement?
Yeah, I think we have to be a little bit cautious, and this is a general statement. You know, that extra money that we were probably being a little lavish with or a little loose with in the past, perhaps as a whole, we should be trying to, you know, build up our savings for the potential for what the fall looks like. There's just so much unknown, and I know the economy, or excuse me, the markets have recovered quite substantially. You know, the Nasdaq is posting all time highs. I mean, albeit today is maybe a different conversation, but you know, the simple reality is that we are probably going to have some heartache coming up. I know the
Yeah.
IMF has been talking about a disconnect between what's actually happening versus what's in the markets.
Answer
You know,
IMF is.
International Monetary Fund. So, you know, just looking across the world, it's not just Canada, it's not just US, you know, emerging markets, Europe, just the entire globe, there's going to be pockets of issues and they have a trickle down effect,
Right.
right? So we'll see what happens once the government starts to ease up on all these benefits. That's going to be a very telling point.
Yeah, I agree. I agree. And so let me come back to what I said originally. You know, we're figuring this out as we go along. Let's call it a moving target, right? So I think as things kind of go along and we figure things out and we see what happens and we're different. I'll use myself as an example. We usually do work on the house, substantial work sometimes every summer on the house. This year, we're not doing that. We're doing minor things that don't cost a lot of money. Could I have gone and bought the newest technology, when it came out? No, I didn't. I've chosen not to. So that comes back to all the other stuff around spending, and we've heard enough about spending to last a lifetime. But yeah, saving right now, I think, is the key. If you're able to do it, save up some money. So what do you see coming down the pipe? Next week we've got Canada Day long weekend, so I'm pretty sure not a bunch of stuff coming up, but anything new coming down the pipe on the market side of things?
There is some conversation around it's the end of Q2 and what might happen with some bigger funds and hedge funds, and might there be some end of quarter selling. Markets are down today. I think Wednesday was another relatively bloody day. So I think the digesting of the news down south and the simple reality of worldwide cases posting, high number day after day. I think it was the WHO came out saying that, this isn't even really the peak. So prepare for it. I mean, albeit it sounds like hospitalization is going down. Mortality seems to be going down. So these are all good things, despite the fact that cases are going up. So that's probably what's occurring. I think you're starting to see perhaps a digestion of the possibility of a democratic change in the White House this November, or at least a higher possibility or probability of it. And arguably, Wall Street will not be as ambitious of Biden versus Trump, because Trump has a tendency to, try and stimulate things from a tax perspective and from a regulation standpoint. So, that's kind of the things that we're watching for. But none of this is going to be a day-to-day or week-to-week. It's a prolonged scenario.
For sure. Yeah. And in the mortgage world, we have Canadian Mortgage Housing Corporation, CMHC. Their rules come into effect July 1st. But as I've said on multiple social media outlets, don't worry about it, because there's two other insurers that have not adopted the changes. So that will be a nice little Canada Day non-event is what I am hoping for. So
there you go.
Sam, thank you as always, my friend. Good to see you in a stable location. It's nice to see that you've got that happening for you now. And other than that, folks, you know where to find Sam and I. If you have any questions, don't hesitate to reach out. We will talk to you soon. Have a wonderful Canada Day holiday. Bye-bye.